So, good morning, everyone, and welcome back to our weekly webinar series. Today is our episode number 143, and it is all about valuation under CIRP and liquidation, valuation of assets under CIRP or liquidation. And the idea of today's discussion is how to carry out the valuation process as an IP and what is to be done by valuers as valuers in this entire process and how we can expedite this entire process and make it, I would say, less cumbersome because uh, there is a lot of complication when we talk about this process. There is a lot of delay when we talk about this process that we usually see in the processes that we see around us. And therefore, it is important to understand that what is the duty of which person, what is the duty of the IP, what is the duty of the valuer, and how can they work on this kind of making a valuation report, completing the valuation process in a time-bound manner, and also how to carry out this valuation process so that this is something that kind of adds value to the entire process. So Anil sir is traveling. He's in the flight right now, and he said that he will join us as soon as he lands. So he's expected to land in about a half an hour. So we are expecting him to join us then. But I would urge my fellow insolvency professionals, my fellow registered valuers to raise their hands, to share, their questions, their suggestions, their comments on whatever, I will be talking about so that we can have this as a very interactive session. Also, it is important to understand that since we see both sides, we see the sides where we are doing the valuation for other insolvency professionals as AAA Valuation Professionals LLP, and on the other side, when we see the fellow valuers doing the valuation process for us when we are acting as an IP, there we of course see that we see both sides. So therefore, we are hoping that in today's session, we can talk about what are the possible changes in the regulations that can help us or help this entire process to be expedited. Also, to understand what kind of other processes can be talked about so that this is expedited. I will share my screen. We have a small presentation so that the relevant regulations that are relevant for this discussion are on your screen, and it helps us absorb this better. So I'm sharing my screen, all right. So we are looking at various provisions of IBC. We are looking at various provisions of the regulations, and then we'll be talking about what needs to be taken care of when we are talking about this. Who needs to do what to make sure that everything is in place. So first, we are briefly talking about the control and custody and provisions of IBC. Section 18 talks about how the duties of interim resolution professional include. At A only, we have collect all information relating to the assets, finances, and operations of the CD for determining the financial position of the corporate debtor, including information relating to business operations for the previous 2 years, financial and operational payments for the previous 2 years, list of assets and liabilities as on the initiation date, and any such other matter as may be specified. This is how Section 18 is worded. So the first duty that an RP has or the IRP has when he is appointed as an RP is to take custody of assets. That is one of the duties that is prescribed in Section 18 in subsection A. Then we have F. F is another relevant part of 18, which says that the interim resolution professional shall perform the following duties. What is it? Take control and custody of any asset over which the corporate debtor has ownership rights as recorded in the balance sheet of the corporate debtor. Now, the balance sheet here becomes a very important document, or with IU or the depository of securities, and then they list out what are the assets that are included. So, what are the included assets? Assets over which Corp CD has ownership rights, which may be located in a foreign country, assets that may or may not be in possession of the corporate debtor, tangible assets, whether movable or immovable, intangible assets, including intangible property. Then you talk about securities and assets which are subject to determination of ownership by a court or authority. Then you have explanation, which kind of excludes certain assets, that no, these are the assets these will not be included in the custody. So what are these assets? These are assets owned by third party in possession of the corporate debtor, held under the trust or under contractual arrangements, including bailment, assets of any Indian or foreign subsidiary of the corporate debtor, such other assets as may be notified by the CD. So this is what is these are the assets that are required to be taken possession of under section 18. And then let's talk about what is required under the requirement under Regulation 36. Now, Regulation 36 is about information memorandum. It comes in from the idea that the IM is required to be prepared by the 95th day from the CIRP date. That is the requirement. So today, when we talk about the IM, you're looking at how it says the IM shall highlight the key selling propositions and contain all relevant information, which serves as a comprehensive document conveying significant information about the CD. Why? I will shortly share why I'm talking about how the contents of or the required contents of the IM are important. Then we talk about assets and liabilities, including contingent liabilities. Such description as on the CRP date are generally necessary for ascertaining values. So here again, it talks about values and talks about how assets and liabilities and the details. So then explanation, it says description includes the details such as date of acquisition, cost of acquisition, remaining useful life, identification number, depreciation charge, book value, geographical coordinates of the fixed asset. So these are details that are required for the RP to incorporate in the IM, and it is a duty of the RP to get these details wherever possible to incorporate them in the IM. Then the latest annual financial statements, audited financials for the CD for the last 2 financial years, and provisional financials for the current financial year made up to a date which is not earlier than 14 days from the date of application. Then list of creditors containing the names of creditors, amounts claimed by them, amount of their claim admitted, and security interest, debt due from or to corporate debtor from related parties, guarantees that have been given, then names and addresses of the members or the partners holding at least 1% stake in the CD, all material litigations, number of workers, employees, liabilities, snapshot of business performance, key contracts, key investment highlights, and other factors which bring out the value as a going concern, including what brought forward losses from the ITRs, input tax credit of the GST, key employees, key customers, supply chain linkages, utility connections, and other pre-existing facilities, business evolution, business overview, and key growth drivers, fair value as given by the valuers, and other information as the RP deems relevant to the committee. So this is how the IM is required. Now the IM in then sub-regulation 3 also talks about how further information of the nature described in this regulation, and so further information can also be added. Then it says that the creditor shall provide to the RP the latest financial statements and other relevant financial information of the corporate debtor available with them. This is also something that has been part of the IM. So why is this important now? So let's understand that why is this important. If we look at 3A, CRP regulation 3A. 3A then talks about how the personnel of the CD are supposed to assist the RP. Assist in what fashion? They are supposed to, in 3A sub-regulation 1, they say that the IRP or the RP, as the case may be, shall take custody and control as specified under this regulation from the personnel of the CD, its promoters, and any other person associated with the management. So sometimes we make the mistake that, okay, the CD is only the suspended directors or the management. But when we look at this definition, it can have a wider meaning, and therefore that's very important. Then we talk about the what is the required to be taken care of. The records of information relating to the assets, finances, and operations of the CD referred to in clause A of 18. We just saw clause A of section 18. Then it also talks about clause F of section 18. We also saw that. Then it also says, and such other information required under regulation 36. So that's again IM. So these are three sections, section 18, the clause 18A, 18F, and finally regulation 36. Whatever information is required by the RP under these regulations is information that can be asked by the RP from the personnel and he can ask them to provide all these details. These are also details that can really help the valuer in getting and getting the valuation process forward. Now, when we talk about 3A2, 3A2 talks about that if the personnel of the corporate debtor, they do not, they shall once say, they say that they shall provide a list of assets and records while handing over their custody and control, and the IRP may, after taking such custody and control, if deemed necessary, identify persons in whose possession these. So 3A2 is talking about what? It is saying that in case the management is cooperating and they hand over these assets to the RP, then this is a process that the RP should exercise. Now, where the assets or records have not been handed over, there the list and the list or the list has not been provided, there sub-regulation 3 is very clear that the RP or the IRP shall himself prepare a list of assets and records while taking custody and control of the assets and records, and then of course give back the possession in case they're required to run the company as a going concern. But he has to first document that what he has to make a list by himself, that what did he receive when he took the custody. Then 3A then also talks about that each list of assets and records under sub-regulation 2 and 3 shall be signed by parties present and by at least two individuals who have witnessed the act of taking control in custody. So these are independent witnesses who have to sign. So we say this is a panchnama. What is a panchnama? Panchnama is where five people are involved in a process, and yes, two people, three people will certify that yes, this certainly happened. One person will say, I've given these assets. The other person will say, I've taken over these assets. Sometimes we appoint, sometimes we appoint a professional. Sometimes we appoint a professional to do this job. So that person can also sign on this list. But this list is important, and this list is an integral part of the regulations. And therefore, when we don't have this list with us as an RP, it can also create difficulty in the valuation process. Now, the IRP or the RP, next sub-regulation 5 says, shall requisition from the personnel of the corporate debtor, its promoters, or any other person associated with the management of the corporate debtor, as the case may be, the information relating to the assets, finances, and operations of the CD referred to in clause A of 18, and such information required under regulation 36. So again, it talks about 18A and 36 and refers to that and says that this kind of information has to be requisitioned. So I will shortly share an example of a requisition list that we prepare after looking at the financial statements, that, okay, what is the information that we need? Now, this requisition list should ideally also include that information that is frequently required by the valuer. Now, the IRP and the RP, next we talk about sub-regulation 6. So it says, shall requisition for the personnel of the corporate debtor, its promoters, or any other. Now it talks about what is referred to in 18F. And it says that these are assets which are, if they are recorded in the balance sheet or any other records referred to in clause F of 18, then these are also required to be requisitioned by the from the person of the corporate debtor. Then, of course, sub-rule 7 talks about how 19.2 can be used. 19.2, we all know section 19.2 is all about seeking NCLT's intervention in getting the assets. And there in 19.2, sub-regulation 7 casts the responsibility on the RP that he shall show that these assets, sir, are listed in the notice of requisition and absent in the list of assets or records taken in control or custody. So then it becomes his liability to establish that, no, in the control and custody, I do not have this information, and see in my requisition list, I have this requirement that I have stated. And then, and even after that, the other person is not cooperating. So if you look at section 19, 19 of course says that the personnel to extend cooperation to IRP, and it says that the personnel of the corporate debtor, its promoters, or any other persons associated with the management uh, shall extend all existence and cooperation to the IRP as may be required by him in managing the affairs of the CD. So this is how 19.1 is structured. And of course, we know 19.1 how it moves forward. But yeah, what is important is that 3A, when it refers to 19, also refers to 18, A, 18F, and also refers to regulation 36. Therefore, all that information is important. Now, what are the other sources of information that are available with respect to with the RP? Now, when we talk about other sources, we of course say that any information that is available with professional advisors of the corporate debtor, any information that is available with registries that are having records of ownership of assets. The income tax portal has become a very, very important source of information from various RPs. One can access the income tax portal without cooperation from the management, simply by using their act as a representative feature. And that gives a lot of information. So wherever some income tax returns or some income tax balance sheets are filed, that immediately becomes available to the RP. Then, of course, promoters, members, partners, all those are also required to share whatever information they have, and contractual counterparts are required to share that information. Then we talk about how the when we talk about regulations, we talk about Regulation 4, and we talk about Sub-Regulation 4. The person of the corporate debtor, its promoters, or any other person associated with the management of the CD shall provide the information within such time and such format as sought. So this is also something which is very clear that, okay, this kind of a process is there. Then it is important for us to say that even with respect to, not only with assets, with respect to information that is required, it is also important to have information with respect to the creditors because of 6A. Now, 6A also requires the various information with respect to creditors to be available as per the latest available or last available books of accounts, so that the communication to the creditors can be made that kindly submit your claim. Other sources of information are claims. Now, if you get a claim from an operational creditor under Regulation 7, you can have the contract for supply of goods or services, you can have the invoices, you can have the order of a court or tribunal, financial accounts, you can have extracts from GSTR 1 and 3B. So these can be, again, help you in digging out more information, because some information that you receive can lead to more information coming in. Similarly, when we talk about 8, we talk about financial creditors. So financial contract, then we count about record evidencing that the amounts committed by the financial creditor to the corporate debtor are under a facility has been drawn. Financial statement showing that the debt has not been paid. So this way, we have creditors in a class like home buyers. So for home buyers, agreement for sale, letter of allotment, receipt of payment, all these become important information which can be collated by the RP, and these become, of course, useful when we do valuation as well. Workmen and employees also can give you all this information. So if we pause here and we think that, okay, these are the information, or these are the sources of information that is available, and then of course when we talk about practical aspects, sometimes all this information is not available, or rather mostly all this information is not available in the initial stages of the CIRP. But what is the requirement of appointment of valuers? The appointment of valuers is required under Regulation 27 of the CIRP regulations. Now, what does it say? It says two registered valuers have to be appointed. It says that they have to be appointed within 7 days. It then says that 7 days from the day, from the 47th day from the CIRP date, or 7 days from the date of the RP's appointment. So how does that work? How did that work? So as per the process which is stipulated in the regulations, 30 days is when the CRP, the COC meeting happens, and the RP is voted yes or no. And then, of course, there are 10 days time that is available, or rather budgeted, for the NCLT to approve the IRP as an RP. So therefore, the 7 days start from the 40th day when the RP will be appointed. This is the idea. But we know today that now with the understanding that we have on the regulations, it is possible to have the IRP continue as an RP, and in that case, the RP who continues as an IRP, who is the deemed RP, IRP who is the deemed RP, can appoint these professionals. Therefore, it is important that this compliance is done within 47th day. Now, the various reasons why this compliance may not be done by RPs. One is that COC did not vote and approve the fee for the valuers. So in that case, there is always a possibility to appoint the valuers where the appointment letter clearly says that the appointment is subject to ratification by the COC. So in that case, the compliance is still done where you have appointed the valuers by 47th day. What are the other good practices that we follow to appoint the valuers by the 47th day? So another good practice that we follow is that whatever information that we have with respect to the corporate debtor, we are normally able to share that information with the RV, with the RVs that we're looking for to appoint. Now, what is the process of appointment? So if we talk about the requirement is very clear that the appointment shall follow an objective and transparent process. How? The IRP or the RP, as the case may be, shall appoint a professional under this regulation on an arm's length basis following an objective and transparent process. How do you keep this process of appointing the valuer objective and transparent? So what we typically do is that we typically identify the valuers using some kind of a criteria. I will just share briefly on what we can do, which kind of we feel is a very transparent process that one can adopt. So in case you go to the, if you go to the IBBI website and you simply say that, okay, who are my service providers? So you can say that, okay, my registered valuers, I will just look at the registered valuers. I look at whoever are the registered valuers. I look at entities, individuals, whoever I want to find. And if I, let's say my asset is located at Lucknow, so I will simply write Lucknow. I will maybe choose the asset class of valuers, and I have a full list of those valuers who are available in Lucknow for land and building valuers and so on. So this is one option that, okay, once you choose these values or identify these values, then you send out, either you send out or you keep a process where you first ask for their profile, first ask for their experience with insolvency cases, or alternatively, you can ask for an you can send an RFQ, request for quotation, where you ask their quotation along with their profile so that you can take a decision based on that. Similarly, for entities also, you can have a process where the entities are you can choose that, okay, entities, and you can then choose that what kind of entities can you, all the list of entities comes on your comes right in front of you for you to make the choice and then start appointing valuers. So this is what is important to understand, that the one, we need to have a fair and equitable process. So fair opportunity. So this is how we can kind of give a fair opportunity. Now, what is important is that when we send this request for quotation, we send the quotation with a brief about the company. Frequently, about 80-90% of the cases where we receive an RFQ from an RP, we receive an RFQ with only the balance sheet attached. We do not know from that, after looking at that balance. Sometimes this balance sheet is March 2020, sometimes this balance sheet is March 2022. And whenever we receive this balance sheet, we are clueless whether the company is still a going concern, whether the company has assets, tangible assets or not. If there are tangible assets, then what are the locations of those tangible assets? So we understand as RPs also that sometimes this information is not readily available, but vaguely we understand that by the 10th day, 15th day, the RP knows that where are the assets located in case the assets are with the company, because the COC members, the creditors would know something about the company. Somebody would tell something to the RP that, okay, these are the location of the assets. And in case location of the assets is not known, details of the assets are not available, then of course the RP can of course talk about or say disclose that also. Why is this important? This is important because when we talk about, when we ask the valuer to give a quote, now the valuer will have certain elements that he has to take into consideration before, or certain factors that he has to take into consideration before sending out that quote. What are those factors? Factors are, if there is a going concern, will he have to value the company as a going concern? In case the we have a so Anil sir has joined us, and
Yes, Ankit. Am I
yes,
audible?
yes, much.
Okay, okay. So the flight was late, so we are just landed at Kochi, so little bit of disturbance in time. Good morning to all the participants today. So I believe we have discussed about the valuation difficulties those are faced by insolvency professionals, liquidators, resolution professionals, and we also from the audience?
Yes, I think what we will do is in
Yes,
five
Ankit?
minutes time, we will have a Q&A. We will take the questions that we have with us. So far, I have run through the process of what information is available or required to be obtained by the RP, which is readily available with the RP under 18A, then 18F, and then of course Regulation 36. Then we were talking about the valuer appointment process, how it is required to be fair, how the opportunity is required to be given, or a fair process is required to be conducted under Regulation 27. And then we were talking about that what kind of information is typically required by the valuer to give a quote, which he can then be able to kind of support or be able to take forward when the RFQ comes to him. So this is where we were, that the quote of the valuer has to factor in the location where he has to visit to verify the tangible assets. The court has to take care of what complexity of assets might be involved in the entire process. So therefore, that RFQ is important. The RFQ should ideally include all that information that doesn't disclose too much, and also gives an idea to the valuer about what kind of scope of work he will have to carry on to take care of the valuation process. So this is what we were talking about. So next, I will like to talk about the typical IRL that we send out when we talk about when we kind of get a valuation assignment. So it's important for us to go through this information so that we can understand that why is it important and why all this information is important. So when we typically, this is a standard RFQ for all three asset classes. So common information from for all asset classes can be the financial statements, which are available for the company, the details about the last known active operations, sanction letters, deeds of loans taken by the company, so that it can be understood that what kind of assets are under what kind of security, so that different assets can be given values to depending on who holds their security. Then pending litigation or arbitration matters, details of those. Then we have land and building assets. So when we talk about land and building assets, typically we want the lease deeds or the sale deeds, the legible scanned copies of the title deeds in the name of the company, the Google Map location or WhatsApp location to understand the location of those assets. Then approved site plans, architecturals, because when you have buildings in place, the valuation of these buildings improves greatly in case such maps and such plans or sanction plans are available. Typically we find that these are not applicable, not available. In those cases, then the valuers take a call and they do the valuation based on the physical verification or the physical measurements that they're able to take when they visit the site. And then any outstanding water electricity charges that might have a bearing on the value of the land. If there is an insurance policy which is obtained by the CD, that also is sometimes having details with respect to what kind of dimensions, what kind of asset is there in the land and building. Because typically, if there is a mortgage, there is also an insurance on that mortgaged asset, which is done by the banker. So that insurance policy also helps in understanding more details about the building, more details about the area in the building. So land and building assets, typically we would require all this information. If we talk about a real estate case or a real estate project, then the values, of course, the requirement changes. The requirement then increases to understanding that what is the unsold inventory, what is the sold inventory, what is the cost of completion, what is the profit margin that might be kept there, and then you value the entire real estate project as a going concern. This is normally what we do. Plant and machinery assets, normally the details that are required are the particulars of the assets, capacity, specifications, date of purchase. So all these details are very important for the valuer to take and make an estimate about the value. When all these details are not available, the valuer then normally gives a discount that in case this information is not available, the market will also see these assets at a discount, and they will also charge a discount or give a discount on those assets. And it also then makes valuation a little difficult, and it requires the extreme technical expertise of the plant and machinery valuer to find and try to understand what is the value of the asset that will be available in the second hand market, Unfortunately, in India, whether it is land and building or plant and machinery assets, we don't have a organized secondary market data that is available for anyone to say. Today, you say that, okay, there's a lathe machine that is available with the RP, with the CD, and the value needs to value it. Now, there can be there can be difficulty in trying to find out that what can that value or what can that machine fetch. Also, of course, it is when we do valuations, we are able to we try and understand what can be the scrap value in terms of the scrap value of those assets depending on the weight and volumetric analysis of those machines. But that's again something that is deeply technical. Then we come to SFA assets. So it is extremely important that when we also do the RFQ, to I try and understand if there is a subsidiary to the RP to the CD. In case there is a subsidiary which is an active subsidiary, which is a going concern, then ideally there is also a requirement to value that subsidiary as a going concern. So that becomes an added scope of work. So it is very, very important to understand what is lying in non-current assets. So status of non-current assets, if it is told to to the valuers, also gives a lot of clarity to the values with respect to the scope of work. Then when it comes to other assets, when it comes to mostly inventory, so inventory, wherever it is available, mostly we have seen that the list is not available. 50% list is available, 50% list is not available. Where the list is not available, we normally then, when we are appointed as valuers, we normally, or rather when we appointed as RPs, we have in the past done something where we have appointed one of the two valuers or an external party as a consultant to give us an inventory of to take the inventory of the assets that are lying at the location. And that inventory is then what we ask both the valuers to value and or to physically verify. Now, this is something that we normally do, and this process, allows us to allows a professional to make the list of those assets, and allows the valuers to limit their scope of work to uh, getting the limit their scope of work to getting the verification of the assets done, which is also recorded in the regulations. So then other assets, when we talk about investments, when we talk about sundry debtors or trade receivables, there again, what is important is that anyone who would look at that trade receivables, what does he look at when he's trying to value these assets? So sometimes a person will look at their age, sometimes the person will look at uh, whether the invoices are available, ledgers are available. Is there any follow-up data with respect to those debtors? Is there any subsequent realization that has happened from those debtors? So these are aspects that become then important for the valuer to get from the RP so that he can carry out a fair job. So this is how we kind of then have this kind of a IRL that we share, or that is normally what we work on to get this data from the stakeholders. So I will talk about
We can also add something about when we say that we can appoint additional professionals.
this.
I hope you have already spoken about additional professionals for the purpose of valuation of assets of the corporate debtor. Those additional professionals, I can give few examples. While we understand the assets of the company, we also understand the difficulty in valuation of those assets. One difficulty that I could see in the case of Nirav Modi when I was valuing various jewelry items and diamonds. So then, therefore, we saw that there is no separate class of assets which is actually for jewelry under the registered valuation, registered valuers as per IBPI. So then we, in fact, engaged the experts from the industry who actually can value, can certify, can classify the assets, and then got a certificate from a plant and machinery valuer. And the plant and machinery valuer gave us the valuation really supported by the expert's opinion. Similarly, in case of inventory, in case the inventory items are huge and the valuers normally say that this is not our job to do the kind of counting and verification to that extent. So therefore, we also try to see that this is the counting also can be done by other people who are engaged by the RP. So those are also supposed to be appointed by the RP. Yes, Ankit, you can continue further.
So, as rightly pointed out, that these additional professionals can be appointed and they kind of can then play an important role in the process. Now, coming to the questions, that I can take some questions right now. We have Mr. Patrikar, who says that how to get income tax info from the site as representative. So I also have the similar question from Mr. Arun Kumar Srivastava. So what we do is we log in from the portal of the RP. Now RP has a PAN number, so RP will log in into his income tax portal, income tax e-filing portal, using his own PAN number. There is an option to see to apply for appointment as an authorized representative. And when you click on that, then you have an option that you can say that I am the RP or the liquidator. You can upload the copy of the PAN card, which is normally available with the creditors, or copy of the PAN card of the CD, copy of the NCLT order, and then the portal gives you access to look at it kind of. Then after that, when you log in after getting this access, you will always get to choose that whose information do you want to see. You want to access the portal of yourself, or do you want to access the portal of somebody who you are representing? So this is how this works, and we have seen that this works uh, amazingly well. And sometimes when the balance sheet is available only up to 2020, we have seen that ITRs are available up to 2023. So because there is some tendency for promoters to continue filing the ITRs even if they don't want to file mm, the company law return, the balance sheets before the company law, so before the MCA. So this is what we have seen. So therefore, this information then becomes a very important information that is available. If there are any other questions, I'll be happy to answer in the interim period. Then I will move on to the other parts of the presentation. Just give me a second. Yeah. So I have more questions. Uh, who is the question is who is the right professional to value inventory, SFA or PNM? There is confusion among professionals. So I understand that there is confusion on this issue, and we have been dealing with this issue for quite some time. We take a call that we have then chosen to appoint valuers based on this idea. So the first idea is that in case the inventory is of a nature which allows the land and building valuer to do a better job at valuing the inventory, then the inventory should be valued by the land and building value. Examples where the inventory includes an under construction real estate project, where the inventory includes some kind of a development that was been happening or that was happening with respect to land and building, where the inventory might include some kind of work in progress for an EPC project, where again civil construction or such asset is involved. So there the land and building valuer will be the best person to value that inventory. Secondly, where inventory includes some technical item or some item which is where the plant and machinery valuer would have expertise in doing the valuation of that inventory. Example, stores and spares of machinery. Example, some kind of items which are machine items, or kind of machinery run items. These can be so wherever plant and machinery valuer has expertise or can be understood to have expertise over valuing the inventory. And everything else we can say belongs to the SFA valuer. This is how we would see it. So the gems and jewelry, not classified. We cannot say that land and building valuer or PNM valuer will have a specialization in gems and jewelry valuation. So we can say that the SFA valuer will do that. We cannot say that that maybe where the inventory is, maybe shoes. Let's say there's a company that makes shoes. Now, you cannot say that the plant and machinery valuer or the land building valuer will have an expertise in valuing the inventory of shoes. So therefore, there the SFA valuer can sign that kind of a report. So this is how we kind of distinguish between all these things. Then Shashi Ranjan ji, my partner from Patna, my partner in AAA Insolvency from Patna
I
is
see.
asked.
I can, Ankit, add one more scenario. That scenario can be like in case the uh, there are two things. One is the item in the inventory, and the other is the valuation. So the item can be verified by plant and machinery valuer, and then the valuation, the what is the cost or market value, that can also be done with the assistance of SFA, because see, that is something which can be verified from the books of accounts, and the market value can be verified from the condition of the stock, which is being done by the plant and machinery valuer. I think that you have uh, undergone such scenario in some cases. I think
Yes,
you.
rather, yes, I will also comment on that, and I will also talk about this question from Shashi Ranjan ji, which is also linked to what you just said. That he says that what do the regulations say about physical verification of the assets by the RV? Is it required to be done by the RV himself, or his representative can do it? So there, I will like to quickly share the regulation itself. So this is regulation 35, which requires the valuation or requires the determination of fair value and liquidation value under CIRP. In case we look at the requirement is that the fair value and liquidation value shall be determined in the following manner. That the two registered valuers appointed under regulation 27 shall submit to the resolution professional an estimate of the fair value and the liquidation value computed in accordance with internationally accepted valuation standards after after physical verification of inventory and fixed assets of the corporate debtor. This is how it is structured. Now, it nowhere says that the registered valuer has to do this physical verification himself. Now, one call is somebody can say that no, he has to do it himself. The other call is he can say that the way an IP, the way any person, any chartered accountant, any professional, any lawyer can work with the support of his staff. The RP, RV can also use the support of his staff and do the physical verification through his team. And there, the team, in case we talk about an RVE, the team can be joint, where yes, some partner is visiting and that partner is also taking care of the physical verification of the inventory, which might be signed by the SFA partner, but the physical verification is being done by the corresponding partner who is visiting the assets for verification of other assets. So this is something that we understand is physical, is possible. We of course had also raised this query and question before the IBBI, and we got to understand that no, it is okay for a representative to visit. That representative also may not be an RV, but he needs to be a person who understands how to do the physical verification, who is a trained person, because ultimately the responsibility of this physical verification will lie on the RV, irrespective of who does the physical verification.
Is there any question that can be taken up now, Ankit?
Yes, there are about 16 questions, so let me take those questions one by one. So, if there is an option available to change password and website of GST in case of CIRP. So, with respect to GST, sir, the idea is that the change of this password happens through the GST department. So, there is a process to visit the GST department or appoint a professional to visit the GST department so that you can access the GST portal of the CD or the GST number. That is what we understand. That is what we know of. There is no online process that you can say that I am the RP of the company, I want to reset the password, and you are able to reset the password.
So there is a recent kind of noise in the market that as if the uh, IDBI is trying to understand how many companies were sold where the carried forward losses and unabsorbed depreciation was also available as an asset,
hmm.
and whether those were considered as an asset of the corporate debtor or not, and whether there was any valuation received for that or not. So, what is your kind of experience about the brought forward losses or the unabsorbed depreciation, and whether it has ever been valued, and whether it can be really realizable.
So my thought there is that as a valuer, when I say that as an RVE, when we receive information with respect to valuation of assets, we rarely receive information with respect to brought forward losses. I think in the past 1 year, in case I talk about so many cases that we have done, we might have received information with respect to brought forward losses in a total of 3 or 4 cases. After, of course, this is part of what we ask for, but it is not normally received. We also understand that it's a very cumbersome process to calculate and find out these brought forward losses. Sometimes the income tax portal access is not available, but more than that, it requires analysis of. It is not very simple. It requires analysis of the income tax returns filed by the CD. It requires assessment of the assessment orders which are there. It then requires information with respect to what kind of brought forward losses have been set off with something else. So it's a completely independent exercise that I would say that if IBBI has started looking into this deeply, it is very good. But at the same time, it will also require RPs to put in more efforts to try and find out that what is exactly the available brought forward losses, unabsorbed depreciation, which is available. Then what is available also, it is important to understand that what is available, how does that get treated with the write backs that happen with respect to the creditors that are not paid by the company. So there has to be, if there is a benefit to the RA with respect to this company that he's taking over, then that benefit will be only the net benefit after setting off the brought forward losses or unabsorbed depreciation with the write backs that are taxable anyways. So therefore, it becomes a cumbersome exercise. We as valuers don't see that happening too much.
This exercise, as such, is very, very complicated. When we talk about Section 41, subsection 1 of Income Tax Act and Section 28, subsection 4 of the Income Tax Act. So we normally, in case we do this calculation, we might end up into some additional income tax liabilities. So this is also a kind of incorrect, it's like in the rumor, rather, I would say that there are people who are getting a lot of benefit out of the unabsorbed losses out of the company that they have taken over under IBC. I'm not sure if people have been able to, or any SRA has taken this benefit so far because of the uh, rescission and remission of liabilities that is covered under Section 41, subsection 1 of the this thing.
I see. It's a very new subject, so we don't know what is going to happen in all those assessments that are going to happen from the tax authorities, what is going to be allowed, what is not going to be allowed. But yes, as I said, that even when I discussed the IM has specifically written that what kind of brought forward losses are available should be part of my IM. So an RP is anyways duty bound to talk about this. But what I'm trying to say is that doing that, making that part of your IM is also a cumbersome process. So for that one can always seek a professional's help to kind of compute that for them. Some tax expert can always tell the company or tell the CD, tell the RP that okay, these kind of brought forward losses are available. Even the PRAs who are applying for or who are submitting a resolution plan should ideally be knowing that okay, this is the tax implication that will happen when we take over the company or when we get the resolution plan approved. So I will move
So
on to the.
how much time, Ankit, you have come across the valuation of shares of the associate companies or subsidiary companies, and how you feel that without this information of the assets of those subsidiary companies, without having much information about the operations of the subsidiary or associate companies, is it really possible to get this done?
So what we typically ask for with respect to the subsidiary companies is that in case, so first of all, we check in case the subsidiary companies are filing their balance sheets, they're compliant companies. We check in case they are themselves under insolvency or under some kind of stress. So when we do that analysis, we are, 80% of the companies which are subsidiary companies of the CD companies, we are able to form an opinion that no, there is nothing in this company, there is no asset, and therefore it is finished. But with respect to 20% of the companies where this kind of a status is not available, we have to go back to the RP and request for the latest balance sheets or latest last 3 years of balance sheets of the company. We have to then ask for some information which we can use to prepare the projections for that company. There have been occasions where the RP has come back to us with projections of those subsidiary companies, and we have been able to give a value to the company. And then after reducing the debt, we then say that, okay, this is the value, net value, which will be available to the shareholders, or will be available to us as in case we have advanced, in case the CD has advanced in loans or advanced to the subsidiary company, then what value will be available against that advance. So we are able to give that value after doing this analysis.
And like, see, in case a subsidiary company, which apparently it is not having any value based on the financial statement, but finally at times we find that there is an asset in that subsidiary company, or there is any kind of charge on a property where some agreement is existing. So how do we value a subsidiary company where some land and building is there, and we have only a book value of that land and building, whereas the market value of that land and building has actually escalated multiple times. So how do
There,
you
the
at the
the the
valuation?
valuer would need the details of the land and building owned by the subsidiary. Ideally, the valuer is required to value the land and building, then value the net worth, or compute the net worth of that company, and then compute the value of any advance or any share which is held by the CD in that subsidiary company. That is the ideal process. But if information is not available, then the valuer has to give an assumption that since this information was not available, he was not in a position to give an opinion.
So I think, like, what kind of disclaimers are normally given by the valuers, and how does that disclaimers in fact disturb the liquidation value of the company? And what I
See,
understand that
any valuer, any professional who does any job works on that simple system: garbage in, garbage out. In case the data information is not available with the valuer, then he will have to give a valuation report, which kind of gives maybe that non-reliant or unreliable values. And at the same time, also he will have to say that, okay, he has given these values based on the assumption that if this information is not available, then there will be no value. Example, let's say sundry debtors. Sometimes we have cases where not the list of debtors is also not available. So we say, as valuers, we give an opinion. We say that this sundry debtors are 18 crores of sundry debtors sitting in the balance sheet of the CD. But for these 18 crores, the RP does not even have a list of assets. So how will the CD recover these amounts at any point in time? So there is no list of debtors, there is no ledger, there is no invoice, there is no follow-up history, there is no contract, there is no proof of service. So in that case, there is no aging. So in that case, if somebody would want to, even an SRA would come in, or even the company goes into liquidation, what are the chances of recovering anything from these people? There is no even subsequent recovery. So these are things that we will have to put in our valuation report as a valuer and give zero value.
My understanding is that if valuation is done appropriately, and then the resolution also can be seen uh, and fruitful. The difficulties that actually valuers are facing only because the information is not available. Therefore, when the information is not available, that means the valuation is negligible, because they would not be able to give a valuation. And finally, when somebody will ask what is the liquidation value or fair value of the corporate debtor, at that figure will actually not have the disclaimer, but that still have the simple figure. And that simple figure will finally kind of form an opinion, like what kind of resolution plans are expected in this case. But this actually is very, very kind of important part of the entire process, CIRP or liquidation. When we say these valuation is an exercise which is the backbone of the resolution. Yes, Ankit.
So I'll quickly take some questions. We have a question from Mr. A.S. Dhani. He says, how to account for assets installed at customer end by the company? So they have to be accounted for. These will normally sit in the balance sheet of the company. They will be situated at the customer. There will be a contractual arrangement which will allow which will typically allow the CD to inspect that asset. Therefore, it will also allow for the value to inspect that asset. With respect to valuing that asset, there are two possibilities to value the asset. One is, of course, to understand that, okay, what is the realizable value of the asset itself? And the second is to understand that what kind of cash flows will come to the company from that asset under the contract that has been entered into with the customer that you're talking about. So these are the two ways one will value this contract or this asset or the cash flows from this asset and arrive at a value of this contract or the asset. Then we have Mr. Patrikar. He says IT access worked for me, but then IT department e-filing login of CD. Now after resolution plan is approved, I am unable to hand over the login ID. So I am also going through the same problem. And Mr. Patrikar, we will stay in touch and we will find a way to do this or to reverse this appointment, because after once you take over the IT portal as an RP, then the login details of the CD itself are disabled. So we will have to try and find out that how we can change that. I am also in the process of doing that in one of the companies where the SRA is already there. So we have Mr. Patil saying that how PRA can have valuation. So, sir, any PRA is any person can have a consultative valuation from any of the any valuer that they want to appoint that they have trust on, and that valuer can go through the information as your advisor and give you an estimate of what value should be available to you in case the resolution plan goes through. I don't see a problem there. If 19.2 is filed, that's Mr. Ranjan, he says that if 19.2 is filed, the valuation can be done with disclaimers. When the valuer does the valuation, the valuer is dependent on the RP. The valuer will give a report where he says that, okay, he has taken these as assumptions in absence of this information. So in that scenario, it is the 19.2 in some ways protecting the RP, because in case the RP has not filed a 19.2 with the due process where he has listed down all the information or served a valid requisition notice, then the RP will be able to say that, see, the valuer asked this information from me. I wanted this information for the purpose of 18A, 18F, and Regulation 32, Regulation 36. And therefore, I have served this requisition notice, which has all this information in it. And since this is not being made available, how can I improve the valuation? How can I improve the valuation process? So this is how it will guard. But a 19.2 process alone will not guard him. The RP will have to give a fully complete requisition notice. I also have an example of a requisition notice for you. So let me try and share it with you. Now, this is the sample that I wanted to show to you, that in case you talk about this, uh, you have kind of, you can kind of talk about what is information required, give screenshots of what information is available in the financial statements, talk about the value which is involved in the entire process, then talk about the status, talk about the date of receipt, if any, and then talk about what kind of remarks has the management given to you with respect to all these requirements. So it's important to maintain this kind of a tracker so that the RP protects himself even if he is filed 19.2. Then we have
I would
signal.
say, Ankit, regarding 19.2, I would say that the time has gone when we say that application under section 19 subsection 2 would be protecting the RP. What exactly this would be doing is that, yes, you have filed the application, but you have to also give all the work done by you, efforts done by you for taking that information. If not coming from the promoters, then everyone will ask you whether you have you have made the effort to get information from third parties like auditors, other government agencies, creditors, because see, now the regulations are also changed. These regulations are now saying that the creditors are also bound to give this information. So this is what I'm trying to add here.
Right. So yes, that's important input, that it is not just readily. It's not just like just an immediate solution. Okay, 19.2 is filed and the RP is saved. One has to show all the efforts, all the various efforts that one can make in getting this back. Uh, I think we're running out of time now, but I can still check if there is any other question that I can take up. Um, so with respect to, there is a question from Vaibhav Sharma ji. He says that should we ask for projections to value deferred tax asset and input tax credit? Projections, yes, projections are always something that we ask for wherever there is a going concern, or even if the going entity is not under a not running as a going concern as on the CRP date, where one can say that it is expected to become a going concern. There one has to make projections, and in case one makes those projections, then while making those projections, the tax implication that can come in from any carried forward losses, from any deferred tax asset, from any input tax credit that is available, must be taken into account when we are valuing using those projections. Intercorporate deposits, Weberji is asking how to value intercorporate deposits. So whenever there are intercorporate deposits, one would ask for agreements. What are the terms of repayment of those deposits? Mostly these are not available. In those cases, then you shift on to understanding what is the status of the entities to whom these deposits are made. So in case those entities are going good, those entities are still doing well, then one can say that these deposits can come back. Also to understand what is the reason for these deposits. Sometimes these are security deposits which are already forfeited, already settled against some kind of expenses. So that's important to be taken care of. Then how should we value brand name or trademark for a company under CIRP liquidation? So whenever one values the brand name or a trademark, it normally is valued using income method or market method, seldomly valued on cost method basis. It is normally, the valuer tries to understand that what kind of value will that brand name or trademark fetch in the market, and that is what the valuer tries to do. And it is valued using understanding the cost savings or additional income that that trademark or brand name can generate for the CD, for the holder of the trademark or the brand name. So that's something that I can comment on like that. Um, shall the valuer value the carry forward losses and GST credit? That's a question from Mr. Ranjan. Ideally, yes. Ideally, yes. The brought forward losses, GST credit should be valued. But where the valuer feels that no, the carried forward losses will not be available to anyone, or the GST credit will not be available in future, there the valuer can say that the fair value is zero, because he doesn't see these to be available to the new company. But he has to assume a going concern to give a value to these carry forward losses and GST credit, and that's how this will be determined. It also depends on how much of these carried forward losses and credits are allowed in the long run to the resolution applicant. I believe I have taken as many questions as I could. I still have many questions. We have, however, run out of time. So uh, I will I will also share. So I had a checklist with me, which is running into, of course, a lot of pages. So we follow that checklist when we review valuation reports which come to us as RPs. We also use that checklist to make sure that our valuation reports have all those elements in them. That's something that was also recently published by IOV in their book that they launched in the IVS. So it's good to kind of have all these processes. It's a very important exercise, valuation, that is, and it is also very important to make sure that you are appointing professionals who are able to do a just job, do a reasonable job about it. Any last words from you?
No, I think today webinar is a little bit of landmark time. Like half of the time I was in the airport, half of the time I was in the aircraft. So, and therefore, I was expecting this. So, the subject that we thought it would be valuation. I think we can conclude that, Ankit, today. So, thank you, Ankit. I think that's really wonderful.
And
And we'll connect another.
any of the questions that we were not able to take up, you're most welcome
We'll,
to reach us offline, and we will be happy to take up those questions.
all right.
Thank you.
Thank you.
Thank you,
Thank you.
everyone.
Thank you. Thank you. Thank you.